to the tech conference
Good.
in where is it again? I forget.
It's in
Dallas?
Dallas.
Dallas, yeah.
In Dallas in August.
Yeah, our Encompass admin and our systems admin, excuse me, and our ops manager are going.
Fantastic. Fantastic. Well, we'll let people roll in here this morning. It looks like they're just starting to roll in here. Yeah, the our Act Tech Summit, if those of you that are on here already haven't taken a peek at it, you should. I think it's going to be, we used to hold a portion of our program at our conference that was involved with the tech fund and demoing some new tech and those types of things. And hi, Bernard, nice to see you. Um, uh, and now we've split it off into a separate day because we felt like it wasn't getting, with everything that's going on, the attention that it should get. And we can structure it a little bit differently when we have more time, of course. And so that is going on. Jody Hall is the person on our end that's organizing that. So it's good to hear that you have a couple of people that are coming and joining us for that.
Yeah,
Appreciate that.
I think the timing's perfect for that kind of thing,
Absolutely.
and especially with whether it's LOS or otherwise, it'll be a good conference for them then.
Number of things. It's shaping up. I'll put a teaser out there, shaping up to be, I think, a really cool event. So yeah, I won't blow the Jody's announcements of anything, but pretty impressive. Pretty impressive what she's thinking about doing. And as you all know, anyone who knows Jody knows she's a really good strategist and sees things from a lender's viewpoint for sure. So I'm expecting it to be a really, really great event. But I think we'll go ahead and get going here. This is the latest in Mortgage Today. If anybody's on here that I haven't met, my name is Faith Howard Mooney. I'm the SVP of Member Engagement here at the Mortgage Collaborative. This is meant to be a space where we communicate with each other, share ideas back and forth. Please, 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 as Larry and I are chatting here, please do pop things into the chat. I've got a team sitting behind me on this one that if there are things that we talk about that are part of our network, they will pop items into the chat for you as well so that you can pick up information there. Super lucky today. I was telling Larry I got up today and looked at who was on my agenda, and I was really excited that I was going to be hosting Larry Bsharah, who is the president at John Adams Mortgage. They have been a TMC member since August of 2019. 7 years. You guys came on 4 months after I started working here.
Oh, wow.
Oh yeah,
I
so I
didn't
just
know that.
celebrated. Yeah, just celebrated seven myself. And so yeah, very, very exciting to have you. I would love it if you would just share a little bit about yourself and John Adams Mortgage with our audience that's attending today.
Yeah, I would love to. Thank you. Thanks for having me too, very much, Faith. First of all, TMC's been a great addition to us 7 years ago. It really opened our eyes. We're a real estate, a wholly owned real estate owned mortgage company. And for a long time, that model we could do things within our own ecosystem is what we call it. But handful of years ago, about 7 years ago, maybe 8 years ago, prior to TMC, we realized that we needed to expand off of that just because some of the things that we were experiencing with added competition, online lenders, and all of that. So we, in addition to our John Adams platform, where we have our loan officers part of our real estate arm, we started our P&L model, which is the total home lending brand you see behind me, and that has allowed us to really grow and expand outside of our real estate footprint, still being purchase focused, of course. But it has allowed us to add some additional talent, a lot more loan officers, and really grow beyond our real estate 50-year model that we had, and it's been a great addition for us.
Yeah. So it's so cool to hear that somebody 8 years ago had thought processes that way because a lot has really changed. in the last seven, or I mean, it's always that way. It seems like in mortgage things change, but it just seems that there are more substantial items that have changed in the last 7 years than the normal fluctuations that we've seen in the past.
Yeah, I mean to be able to, if you have a home buyer here in Michigan, which is where we're located, a home buyer here in Michigan can go online and search,
Michigan is a
lender. They could, get somebody in Seattle, Washington doing their loan, and what we promote obviously is accountability and being local and knowledgeable and meshing great technology for a company of our size and local knowledge and being personable with and in face being able to be face to face with people. Been a great combination for us to be able to sell. And in our market,
I was
um,
just gonna
we are
say,
very broker centric, given UWM 20 minutes north, Rocket 20 minutes south of us. And
you're kind of sandwiched a little bit
yeah,
there.
yeah, and we have a strong IMB network here in Michigan,
Yes.
and really good, strong competition from our local IMB competitors. But we also are very broker centric. So that was part of it as well back then. Is we needed to bust out of our ecosystem, and it's been wonderful for us.
Yeah. I was just having a conversation with somebody. This is off topic for us, but I was just having a conversation with somebody yesterday and was trying to explain to them why it would be good to have their employees to see the industry beyond their walls. That's what I always call it, beyond their walls, because they got employees that are great. They've been there for a long period of time, but they're sitting in their walls and they don't go to conferences and they don't go other places. And I think that's part of what we bring to our network is people envisioning things differently than they would if they hadn't heard of something from someone
Yep,
else.
no doubt, 100% agree.
Yeah. Yeah. Well, let's hop into it here. Um, One of the things that I wanted to talk about, part of it is because this is personally very interesting to me, but I think it is kind of a trend with, as we all know, insurance costs have went up. I mean, essentially everything with housing has went up for homeowners. One of the things that has really taken a dramatic leap some places are the cost of HOAs, in what they are doing. I live in an HOA. My HOA fee monthly went up over $100 a month.
Hmm.
It is because we own two pools in the HOA that I live in. It's a very large development. I know that's why, because the cost of maintaining them is huge. But there are now 5 units like mine in a 6 building radius that are now for sale. And I also know that that's part of the reason, because at almost $6,000 a year in HOA fees, people can buy a different, I mean, they can possibly qualify differently for a different type of unit. So, what was out in the news? It was from National Mortgage News, and it's been about a month ago, it was 2 or 3 weeks ago, that HOAs have filed 284,933 liens in 2025, which we know in 2026 things have not also went down, up 8.6% from the year before. And a lot of it is some of it is delinquency, but part of it is just because of higher insurance and higher maintenance costs that the HOAs are responsible for paying for the homeowner. I would just they did mention in this article that the Midwest was kind of like not as impacted by that, which, probably true. They're probably greater increases other places.
Mhm.
But in comparison to the mortgages, I think that some people hold in the Midwest, it is still a significant chunk of change, that they're getting hit with. Do you think that, they're calling them a shadow mortgage, by the way? I don't know if people have heard that term. I had not heard that term. So they're calling them a shadow mortgage. Um, a lot of people don't factor that in. Does any of this surprise you? I mean, you're predominantly
Yeah.
Midwest as well.
Yeah, it doesn't surprise me. Our condo mortgages that we do, the mortgages we do on condos, we're up about 30% in just condo business this year over last year, which the only thing I could think of as to why is condos don't appreciate as much as single family homes. So maybe they look at it as they're looking at just the price of the condo versus the price of a home and not thinking about the association or maybe buying a lesser price condo versus what a single family would be more. But what doesn't surprise me about what you just said is Florida, Texas, Arizona, you have a lot of retirees that are on fixed incomes
Absolutely.
that buy condos thinking, oh, hey, I'm retired. I've hit the part of my life that I'm good. And then they get hit with the assessment of a roof, a parking lot, a parking garage, or
Yeah.
whatever the case might be, and they can't afford it because they're on a fixed income, Social Security and whatnot, and they can't afford the 10, 20, $50,000 assessments that associations place on the development, or they can't keep up with the increasing costs of the monthly homeowners association
Right.
dues that are just you said it yourself for your own you're it's trying to keep up with inflation and insurance costs for the master insurance policy, and it's just it gets to be too much. It gets to be too
It's
much for
funny
people.
because I know my neighbors really well and I hate it that they're leaving, but the people that are leaving our unit are not the older people.
Oh,
It's the younger people. But next door to me, I have a delightful man who has two sons that are 13 and 11. And he's like, the amount of our HOA pays for all of their baseball fees
mm,
for the year. And I'm choosing their baseball fees because I can go somewhere where I don't have this. I'm choosing baseball fees over a pool.
yeah,
And so, yeah, so it's interesting kind of to talk to some of them. The three of the other four that are out there, they all just had babies and have decided that that they want to put the money somewhere else versus into an HOA. So it's just always interesting to see that when you see something like that happen, directly. Of course, when it directly impacts you, you pay more attention to it, of
sure,
course.
sure,
But it just does make you wonder about, like, I know I was talking to my 90-year-old mom this last week, and she was saying, oh my gosh, the cost of my insurance. She's still in her own home, still doing fabulous. Don't expect anything to happen to her anytime soon, although it could. She's like, my insurance went up so much. Even she was talking about it.
yeah,
And then your fixed income never keeps up with, it seems like, the expenses, especially when they are what they are right now. Um, Kind of like in a similar vein to that, going to switch topics on you here. Um, in the news, just at the end, it was at the very end of April, job fears, people having fears about jobs, causing them to rethink whether they should own a home at this point because of their feeling instability, I guess is what you would call it. You're a purchase first company, of course, so you're capturing the bulk of your volume there. Have you heard of like your LOs working with people that are fearful of,
sure.
no, they maybe should own, but are fearful of owning? And I would love to hear kind of like how you deal with that organizationally.
Yeah, so really good question because there is a difference between a fence sitter, which I know that is definitely on the rise. But the way I look at it is pull through, from our pull through rate, not necessarily being a fence sitter or fearful, or is it an inventory problem, but what we try and communicate, our loan officers try and communicate to not just our buyers, but also our realtors as well and our referral partners. And I'll get into that in a second. But when we're speaking with a potential home buyer, our loan officers, and I'm sure I'm not saying anything differently than most companies, but you have to communicate all aspects of what could happen. And here in Michigan, we have the pop-up tax that happens, a year or so after you buy. What's going to happen? How is that going to be in, how is that how that is going to impact your payment? insurance costs, all of that, and then you have to communicate that in the terms that is real for that buyer. If you're talking to an engineer, you got to speak to them differently than a doctor or a salesperson, so they can listen and communicate. And if you're getting the sense, or if our loan officers are getting the sense that it's a confidence thing with their job or the industry that they work in, well, it, we are accountable to our realtors as well. So that's
Right.
not just a home buyer thing. That's a potential listing opportunity for a realtor. So we need to communicate that to our realtors. So when their realtors are very interwoven in their community, probably more so than a loan officer is. So as a realtor, they're going to get asked all the time at whether it's a cocktail party or at a restaurant or a family event or whatever, they're
Anywhere.
the realtor, hey, what's going on? It's up to us to give them the ammo to talk about the information to talk about and sound as incredibly intelligent and educated as possible when it comes to this stuff. So if we do sense that it's a confidence thing, we need to make sure everybody knows that. And like locally, GM's getting ready to go through a pretty big layoff or just starting. The fifth third Comerica, we have a lot of Comerica people that live in the area because this is where their headquarters used to be. They're getting ready to lay off 500 people. Dow Chemical, a couple hours north of Detroit, they went through a 4,500 person layoff, but not so much here in Michigan. They're nationwide. And so those are the things that we have to communicate to people to make sure everybody understands what's going on. So from a confidence standpoint, our realtors and our loan officers can talk about it.
Yeah. And then there's a little wrinkle that's kind of in that confidence factor that, I just heard it talked about this week, is with AI changing so dramatically. Just, I mean, I feel like in the last 6 months, even faster and faster. Um, People are thinking that their jobs, I don't believe this personally. I'll just go on the record and say, but people are feeling jobs will change and the type of job you may have changes and how you do your job may change. But people are feeling, I think, worried that, my job is going to go away. I'm not going to have a job. None of us are going to have jobs. I live in a different space than that and don't ever want to live in that world because that's a hard one to live in.
Uh,
But that does add, I think, to the
Time.
how people are thinking right now, don't you think?
100% because my kids are of age where them and all of their friends are graduating college and getting jobs, and the biggest thing I hear is if you're graduating with a finance degree, for example,
Uh,
those jobs are being offered and pulled back because if you're starting off in the finance world, you're going to do a lot of research. Well, research can be done by AI in a matter of seconds. So those are the types of jobs that are might be there could be some truth to the fear factor. I've heard as
yeah,
much too as radiologists. Their jobs, they won't go away, but their jobs will dramatically change because AI can read uh, uh, everything off of a chart that a doctor who's a radiologist can read, probably
yeah,
a lot faster and maybe some cases better.
yeah,
Um, so
yeah.
those jobs will
Twice
definitely
as
change.
many, twice as many clients, and they may be the deliverer of the
Yep.
news more than the analyzer of what's
Mhm.
going on. Yeah,
Yep. No doubt.
yeah,
There's definitely an impact there for sure.
yeah, yeah, for sure. Um, I'll be interested in hearing enough about that. We're going to move.
Okay.
Um,
All right.
homeowners, I would love to hear if you're seeing more of this. Now, I know you're driven by purchase business a lot of the time, but homeowners choosing renovations over moves or analyzing, should I renovate my home versus purchase new or move? Are you seeing some of that in your market with your people?
Yeah, actually a little less this year than we did the last couple of years. We saw we work with a local credit union on offering home equity lines of credit, and 2020 4 and 25 a lot of HELOCs and we've seen that kind of slow down a little bit. I thought going into the refi first quarter that improvement that we had that we would see more cash out refis for those home renovations. We didn't. We saw still a lot more, about actually three times as many no cash outs than cash out refis. But homeowners are definitely renovating a lot. You see it all over the place, which I think in Michigan, again, speaking of Michigan, we have a very aging housing stock here. Not a lot of new construction. So in long term, thinking long term, I think that's probably a good thing, but it certainly doesn't help the current inventory challenges that we have because if the home is updated and nice and not little to no work, the home is selling in 5 seconds. If it needs some work, it's sitting 30 plus days. So yeah, the definitely people are renovating versus necessarily selling right now.
Yeah. Kind of not related to that, but don't you just feel like there's been just a huge shift in how people feel about their homes after the pandemic happened?
In what way before I
And like
answer that
they
question?
want to be more comfortable in their homes. They want their home, and just in case it would happen again, they want to have this space that fits how they're living. Many
Yeah.
people are still, some people have went back to work, but many people are still working from home and they know that it's a long term, I'm going to work from home now forever, so I need to not have a temporary space.
Yeah, I that's an interesting way of thinking about it because now that you asked it that way, um, people there's really unless you're like dramatically downsizing, there's um, there's really no such thing as downsizing it. Like if you're at a 3,000 square foot home and you're just like, I'm getting close to retirement, I want a ranch, or and you move to a 2,000 square foot home or whatever the case might be between the prices and the taxes, you're kind of in the same boat. So why not renovate your home? Um,
Yeah.
make it more retirement ready and stay put. So I guess I'd say I'm part of the inventory problem because I don't want to I don't want to move.
You don't want to move? I don't want to move ever again either.
Yeah,
I feel
yeah.
like I'm hoping I did my last one, but I'm in a four-story place. And so it's like as you get older, people always say go to that single level living. And I did that once, and it causes you to age just automatically because you don't move around enough. So it's like I'm gonna stick in my four levels as long as I possibly can because I don't want to move. I don't think anybody loves to move.
No, and the older you get, the less you want to move because it's a lot of stress on somebody, say, 65, 70 years and older. Um, and people are living longer. People don't want or passing on the home to their kids. But I do think, people are living longer, but I do think we have a lot of inventory, good inventory building up for the next, say, call it in another 4 years, 3 years. We will start to see more and more because we're in an aging population. People are having fewer kids. Um, People are getting older. I do think long term our industry has some good inventory coming. It's going to
Yeah.
take a little while to get there, I think.
Yeah, yeah. We did something interesting here in the community that the town that I live in, they just put a moratorium on new builds for the next year and a
Oh,
half.
wow.
Yeah, which if you go
Why
out
is
the door
that?
and you drive in any direction, you're in a new building. A couple of reasons. School, we built 11 elementary schools in 12 years when I first moved here.
Wow.
So we're a community that is larger. But it's the all of the things related to putting a new house in place, the utilities that they're not able to keep up.
Wow.
And yeah, so it was shocking to hear that it actually passed. I didn't think it was going to. 'Cause
Amazing.
we have a lot of things that are going to sit empty now, flat, open land for a period of time. It's going to be interesting to see the impact of that happening. That just happened last week, so it's relatively new, but
Hmm.
it'd be
Wow.
interesting to see if other places get in that space because we definitely don't have a housing surplus here. So it's just kind of I understand the choice, but it is
Mhm.
an interesting choice. Critics of our town say it's because they don't want the multifamily that is positioned to being built.
Interesting.
So we'll kind of see how that plays out after it's all over with. But yeah.
Hmm.
The other thing that I feel like you could have a decent amount of, there are a lot of people who own vacation homes, I know, in Michigan,
Yeah.
is second home volume shrinking down a little bit. You know, part of that obviously could be affordability and those types of things. Have you seen that in the Michigan market, in those markets where you have a lot of that type of home? Or, I mean, has it impacted you? Do you believe at all there?
Yeah. So, Traverse City, Petoskey, Charlevoix, it's about 4 hours north of Detroit, and we have a very good presence up there, both on the real estate side and the mortgage side. Um, Lots of second homes, a lot of people coming over from Chicago and of course down here in the Detroit area.
Yeah.
Wonderful. I mean, it's like God's country up there with
Beautiful.
all the lakes and
Yeah, it's like northern Minnesota for us. It's like get out of the cities and be somewhere where there isn't as much noise for
yeah,
sure.
it's beautiful. it- the first quarter weather-wise was extremely difficult up there, all over in Michigan, Midwest. But so the first quarter was very difficult up there from the real estate side because of weather. Listing inventory is flat to down.
Mhm.
Prices are up. So we're not seeing, because of whether it's inflation or jobs or anything like that, we're not seeing any what we call panic listings, because they can't, oh, I gotta sell I need to, release
Can
some of
afford
my
it.
equity, or I can't afford
Yeah.
it anymore. People, when you're buying in a lakefront or vacation type setting, for the most part, they have the wherewithal to withstand any,
Yes.
financial wherewithal to withstand any issues. Just to give you one like really quick example of that, 2008 and 9 financial crisis, there was not in 2008 there was not one home sold on major inland lake up in the Traverse City market during 2008. Not one. And
Wow.
usually there's like maybe 12 or so a month, not
Yeah.
one. So that gives you kind of an example of the type of
Yeah.
buyers that go up there and buy, and again have the wherewithal to sustain any sort of challenges.
It's kind of like that here too. I feel like a lot of the properties that would be involved in something like that are second homes, it's almost like they're passed down from family member to family member.
Yeah,
The family almost owns them together. They're not willing, they share in the usage of it as well as I'm sure the cost related to it. And it's a property that has a lot of emotional value to them that they would never ever want to
yeah,
get rid of. It's probably going to go to someone else in the family.
that's a great point.
Yeah, yeah. Um, Last thing here. Let's talk about profitability in 2026. And we've only got a minute or so here.
Yeah,
So I want to know and understand kind of IMBs are reporting, at least, and we're hearing it within our network for sure, better profitability than they've had, at least at the beginning of this year. We'll see how the rest of the year plays out. How are you feeling about the end of 2026? I know you've got a lot of good stuff going on there, but I would love to end. I'm hoping that this is a very positive story.
yeah,
I'm wanting to
yeah.
end that way today.
I am I'm so proud of our team. We've done, we are in line ahead of the IMB numbers, off to a great start this year. Really, really pleased with everything that we're doing. We've done a really good job with whether it's better processes and AI additions, been able to dramatically increase um, business while not hiring any fulfillment people, and proud to say not letting anybody go because of
Right.
AI or tech or anything. We've been able to maintain. There will come a point. I mean, we're up a little over 30% in units this year over last year, and we haven't added anybody. And so just keep that going. We got to keep that going and just continue to grow and think ahead. Just really proud of the team. I'm lucky, Faith. I'm very lucky.
Yeah. Yeah, a lot of us are. I feel like in the TMC family, I think we work with a lot of really, really good, strong mortgage companies. I feel the same way about my team, just so you know. But yeah, I appreciate you and
Well, thank
your
you for having
willingness.
me.
Yeah, your willingness to hop on here and just chat for a little while. For those of you that joined us today, come back in a couple of weeks and revisit with someone from my team who I think will be managing this call. They don't know that yet. But come back with us toward the end of the month and we'll have some additional updates for you. If you are a lender member who is part of our network, we are going to be in Austin in September for our conference. We just put out our Pulse of the Network survey. It's very important that you fill that survey out and share with us, like Larry did today verbally, how you're feeling about things and what's going on for you in 2026. We do use it to create content for our network, as well as create the agenda for our conference that's in September. So please, if you haven't done that already, please share your information with us. We would love to hear from you. It has been awesome, Larry. I knew it would be. Very, very happy to see your face on this
Thank you, Faith.
Friday and come back and do it with me sometime again soon.
Appreciate it. Thanks,
Thank you.
guys.
Bye.
Bye-bye.